George Beyrouthi from FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia, and Happy New Year. Our first presentation this 2020 beautiful year, which of course we hope that it will make you some more money and be successful. So we start with the first thing we're going to say is that over the last 2 weeks, the Dow in America was up nearly 500 points or 1.8%. Actually, it was up 2.2% over the last 2 weeks. So we can consider 1 week and 2 weeks. We have a good perspective about the trend in the market. We can see the same situations for both the Nasdaq and the S&P 500. All were up, and especially last week, the week before Christmas, the market was actually higher and continued to go higher. And of course, we're starting this week with some concern about what's happening in Iraq or Iran, I guess, with the various spat between the US and Iran. Now, the US dollar was actually a little bit weaker. As you can see here, was down 0.1% almost, and was up 1.1% down over the last 2 weeks. So there is a continuation in the momentum on the downside. The Australian side on the other side, the Australian dollar on the other side, we can see that we've had some 2 good weeks of rising in the currency versus the US. Obviously, when the US dollar weakens against the Australian dollar, well, of course, the Australian dollar gains some strength. If you look at the sterling is weaker against the US dollar. Now, in terms of commodities, because of what's happening in the Middle East, we've seen gold shooting up nearly 5% last week. However, when you consider the week before, even before what happened between the US and Iran, gold was actually on the way up anyway, was nearly 1% higher. Silver again was also high the last 2 weeks, and crude oil, that's the West Texas crude oil, had 2 good weeks. So it's interesting that without any spat between the US and Iran, the various commodities were actually on the upside even before it all started. Soybeans had 2 very good weeks. I guess China is buying a lot more soybeans to satisfy the American and reduce the tariff increase that was supposed to come on the 15th of December. Now, when you look at our market, you can see that the All Ordinary was up 0.2% last week, and the week before was also slightly higher. So in combination, we can see very slight uptrend in the All Ordinary. That's of course the ASX 300. When you look at our gauge, the market gauge, which is the ASX 200, we can see that because of what happened on Friday afternoon, following the announcement of the American attacking one of those brigadier, the second most important man in the army in Iran, the market dropped because of course the market is concerned about retaliation. However, if you look at over the last 2 weeks, we're still slightly higher, 0.4% higher over the last 2 weeks. Our gauge, the market ASX 200, is made up to a greater extent by 2 main sectors, the financial and the materials. When both of these are up collectively, we can see usually the market responds accordingly. And what we see here last week, the financials were down 0.3%. However, the materials were up 0.8%. The last 2 weeks, we can see that the financials were still positive over the last 2 weeks by 0.8%. So what happened last week? Well, obviously we may have seen some declines on Friday, the last trading day, which of course is affected by what's happening in the Middle East. However, the commodities are still holding very strongly, 4.1% rise over the last 2 weeks. And of course, that's the iron ore price. Looking at all the stocks, we can see here that AMP was down 1.2%, CIMIC, Leighton Holdings, down 2%, and Bramble down 3.9%, let's say 4% down. Actually, Bramble was down 22% over the last 2 weeks. The question is why? Again, all these numbers indicate there is a reason why we should go back and look at the drawing board and find out the reasons behind those declines. Now, on the positive side, we can see that Worley 2.5% up, and of course Newcrest Mines 7.8%. Most of that came as a matter of interest. Newcrest Mine was down quite a bit 2 weeks ago, and even though we've had 7.6% rise last week, if you consider what happened over the last 2 weeks collectively, we can see the market was only up 2.3%. Got up to $30.20 over 1 week from $28.05 the week before. Okay, now in terms of volume, you can see that the volume over the last several days, because of the Christmas holidays, was relatively down. On Friday, even with the market volume being down, we still have seen 36% of all stocks trading are higher and only 17% down. When you consider week on week, over the last 2 weeks, we can see the advances last week were much higher than the declines. However, again, don't forget at a lower volume. Our mechanical system still indicating that the market in America is very strong, and that is our prediction this morning based on what happened last week. And remember, 2 weeks ago we continued to predict that the market will go higher. In terms of gold, obviously a lot of things happened last week and affected by the Friday increase in the price. Crude oil, we've been bullish 3 weeks ago for the aggressive trader and the very aggressive trader. Then we added the conservative trader on the upside, and of course now at the end of last week we can see that crude oil is very, very strongly upward. And the same thing with soybeans. Coming back to the currencies, about 3 weeks we started to see a change in the American dollar from bullish down to bearish, increasing the bearishness, and this morning we can see that the US dollar basket of currencies is down, and of course that has pushed the Australian dollar up for the aggressive and the very aggressive trader. However, for the long term, the Australian dollar is neutral, and the same thing, exactly the same for the British pound, as you can see here. This is actually the Dow Jones chart. As you can see, last week the market went up, creating a new all record high, still finished high right in the middle of the range, still very positive. And you can see from right through from last Christmas, that is actually December last year, the market has continued to go higher and higher and higher, and every now and then there is a small decline, but the market continues its momentum. This is actually the daily chart, day by day. We can see here that Thursday the market had a very strong rise. Friday the market continued to go higher, however it actually dropped, as you can see. Now in terms of what's happening here in the market, our market, we can see that all sectors have been mainly bearish with the exception of industrial and gold. The worst sector is financial. As you can see here, it's bearish for all segments: the investor, conservative trader, aggressive trader, and very aggressive trader. And the industrial, bullish across all sectors or all segments. That is our market. As you can see here, the market on Friday closed higher. However, during the day it went up to 6781 and finished down in the afternoon by dropping 50 points. Still a rising day, however not at the highest point. Week on week, you can see that that whole week was actually a red candle, indicating a very bearish week. Looking at the various indicators here, the most important set indicators, the parabolic stop and reverse and stochastic on the daily, both of them are bearish. On the weekly, you can see here the parabolic stop and reverse hitting the bottom of the candle, indicating a reversal, and the stochastic on the weekly is bearish, as you can see here. So the weekly and the daily giving us a signal that the market is likely to go down further. Looking at our stocks, ANZ, NAB, Westpac and Suncorp, as you can see here, all bearish. ANZ, CBA slightly bearish, NAB. So the financial, you can see all the banks are on the bearish side. So what do we have here on the bullish side? Well, Macquarie Bank slightly bullish. Newcrest Mines, only 1 day increase on Friday, did not really push all the indicators up so strongly, because remember, some of the indicators are lagging and take time to form. However, we've changed from bearish 2 weeks ago to turn into bullish. Now, day after day, we're going to really compare what we can see day after day with that prediction that we had for the week. In terms of volume, nothing really extraordinary. The market did not show extraordinary volume last week, so nothing you can see here. Okay, finally the disclaimer. We don't know your financial circumstances, so everything we said today is only of general advice. Nothing is of personal, and therefore before you take any action, please consult with us or with your professional advisor. And if you have any questions, by the way, all you have to do is write to us, and this is our email address, george@fssecurities.com.au. FS Securities is our company, and you can ring my mobile. If you're ringing from overseas, it's 61, you don't need the 0. It becomes 61 411 259526. Happy trading, and by the way, if you enjoyed the presentation, please give us some feedback.